What's up, Custer? What's up, Busters? It's your homie Max Pitts and your favorite market analyst from Trades and Gains. And it looks like the stock market was bleeding out and has been since the beginning of 2025. But this week, we're going to see if the Fed is bringing a defibrillator or a shovel to the funeral. Last week, the S&P 500 officially entered correction territory down over 10% from its February highs. The Dow, it lost 1,300 points in 5 days. And tech, well, the NASDAQ got body slammed like it's in a WWE match. However, things did start to recover on Friday, so a little bit of positivity there. So what's next? A Fed meeting, retail sales data, and some of the biggest options flow of the year. And we're going to dive all into it. So go ahead, buckle up, grab yourself a drink, and let's have some fun, baby. So here is the deal. Wall Street is scared shitless right now. Growth is slowing, tariff fears are making investors queasy, and worst of all, the Federal Reserve is still pretending everything's fine. Last week's damage report, we had the S&P 500 down 2.3%, which was officially in correction territory, as mentioned before. The Dow Jones lost 3%, which is the worst week in like 6 months. And the NASDAQ is down 2.4%. And tech is just getting smoked like your favorite op pack, all right? So what happens next? This week gives us two major catalysts. The Fed meeting on Wednesday. Will Powell, our boy Jerome Diddy Powell, acknowledge reality or stick to the higher for longer script? We're going to have to wait and see. And Monday, we have the retail sales report. Are consumers finally tapped out, or is the economy still humming along, baby? If both disappoint, the market's got another leg down. Now, one thing about the retail sales report is you can go look at consumer sentiment, Michigan confidence, all that kind of stuff, and probably make your own decision. I don't think it's going to go too hot. If we're being honest here, I think we're going to see a little bit of blood on Monday. So, just saying, watch out for that. Trade smart, trade safe, because, it could really fuck things up for people. Now, the Fed meeting. Will Powell blink? That is the thing we're all wondering. The big question is, will the Fed cut rates? And the short answer here, fuck no. Markets are pricing in 3 cuts this year. Not sure why, but Powell's last projection only showed 2. And inflation, it's still too high for comfort. Remember, our target goal for inflation is 2%, people. So we need to get to that 2% goal for rate cuts to make sense. Make sense? Right? Right? Well, the market's nightmare scenario, if Powell says rate cuts are far off, stocks will nosedive completely again because Wall Street isn't positioned for that reality. Best case, Powell hints at weakness in the economy. That opens the door for a summer rate cut, which could spark a rally here. Now, next thing up, we have retail sales, as we can see down here. Monday's report is going to be absolutely critical, and here's why. Last month, retail sales dropped 0.9%, which is the biggest drop in a year. This month's estimate, a rebound of 0.6%. But if we miss that, recession panic goes into absolute overdrive, people. Now, why does this matter exactly? Consumer spending is the backbone of the U.S. economy. If that starts cracking, the Fed has to cut rates or things will get ugly fast. And a market impact here would be if retail sales comes in strong, stocks could bounce, but it's bad for rate cuts. If sales miss expectations, expect more the sky is falling headlines. Now, let's take a break here and go and look at some of our options flow from last week from our favorite data provider, Investors Central Club. All right, so let's cut the bullshit and talk about institutions are not trading like the market is healthy right now. And here's what we found using, again, our favorite partners, Investor Central Club, which, by the way, if you want to join, I have a link where you can get a good deal and, get this data too so you don't have to just fucking pester me for it. Bitch. No, I'm just kidding. Anyways, top options flow. We had the S&P 500 dominating our flow scanner last week with 596 million in total overall flow, with 97 million going into calls against 498 million in puts. Translation, big money is hedging hard for more downside. And our most frequent contract that was traded during that time, by the way, because yeah, that's one of the features here, you can click on most common contract, was the 530 put. 530 put. 530 put. Just in case you didn't know. And this was for the April 17th expiration date. So institutions, it looks like they're either hedging or expecting much more blood. Now, NVIDIA, we had 237 million in total flow, with 167 million in calls against 70 million in puts. And our most common traded contract here is the 120 call due for this week. Now, is that shocking? No, because guess what this week has in store for us? NVIDIA's GTC Summit. And we all know what happened with that. So it will be very interesting to see what they have to bring to the table, because this is definitely showing the AI hype isn't dead, but NVIDIA again has to set the tone for AI through their GTC event, which I will be live covering just like I did last year. So don't worry, I got all the details for you. You ain't got to worry about a thing there, sweetheart. I'm going to take care of it, all right? Anyways, Tesla was our next guy up. With Tesla, we had, let's IWM first. IWM had 206 million in total flow last week, with 23.59 million in calls against 182 million in puts, people. Yes, 182 million in puts. And the most common contract that was traded last week was the $190 put for the, again, 4/17/25 strike. The same as SPY. Oh my God, they're twins. Anyways, that is IWM. With Tesla, with Tessie Wessie, baby. Tessie Wessie, we had 106.70 million in total flow, with 84 million in calls against 83 million in puts. It's a split decision, but Tesla, mind you, is still down over 50% from its all-time high. Now, our most popular contract, if I could actually get this to pull up because I just keep clicking on it. So our most popular contract were the $260 calls that are going to expire this week. It looks like someone is looking to hedge big time. Maybe they think it's a sympathy play from NVIDIA, because I think they give NVIDIA NVIDIA gives Tesla chips or GPUs, maybe. I don't know. Somebody might know something we don't. But again, we don't have any big money here, so it's a little bit weird. Next up, QQQ, our NASDAQ ETF, had 167 million in total flow, with 45.79 million in calls versus 121 million in puts, with our most popular contract being the 460 put due this week. It looks like somebody's hedging big time for downside. So that's a very interesting position. And as we can see here, a lot of these are golden sweeps at the top, where we have 2.93 million, 1.3, like we got around 1, 3, 4, 5, 6, like 9 million in institutional money going into that. So tech is still getting dumped, it appears. Now the bottom line, SPY and QQQ are bearish AF. Bearish as fuck. So watch out for that. NVIDIA has bulls buying dips, but it's not full conviction yet. This is mainly, again, it's a GTC play. I have a feeling this is a GTC play, 100%. And again, Tesla is in limbo. Now, let's go ahead and look at our dark pools for our institutions from last week. Now, what are dark pools, Max? Well, it's where institutions buy stocks. That's where it is. I don't know. Total cost, let's go ahead and filter that so I can get the biggest biggers. We got SPY at 1.4 billion. Holy crap, in one trade. What the actual flippity flarn happened? 2.5 million shares. Do with that information that you will. And it was at the 562.51 spot. We had VU and IVV with nearly $900 million going into each. Are institutions looking to reposition maybe? Because we've been seeing some big prints in the dark pool for VU recently, which is kind of giving me the feeling, It's giving me the feeling. There might be some repositioning going on in the background here that retail's not hip to. That's why dark pools are important, by the way. You got to think about it. In coin, it had 82 million in bullish flow overall. Is this a Bitcoin play maybe? Are we looking at a Bitcoin bounce? So Coinbase is going to benefit? I guess we're going to have to wait and see. Translation, institutions are either buying the dip or repositioning hard for more pain. Given the options flow, I'm definitely leaning bearish in this situation. Now our weekly game plan, hold on, for this week to kind of wrap it all up, Our weekly game plan, Monday, we have retail sales and we're expecting 0.6% growth. If we miss, watch out. Tuesday, we got housing starts and building permits. Is the real estate market starting to crack? Fun tip, I think Warren Buffett is looking to offload some of his real estate stuff. So that should maybe tell you something. Wednesday, we have the FOMC meeting. Powell's moment of truth. Will he deliver or will he tank the market? Thursday, we have jobless claims, and then we have earnings. Jobless claims is going to tell us how strong the labor market is. You get that. We cover that all the time. If you don't know that by now, you clearly do not follow the channel. Anyways, earnings. We have Nike, FedEx, Micron, huge market movers that are going to hit Thursday. And Friday, we got a quiet day, unless markets decide to throw an absolute fucking tantrum. But final thoughts here. We are either at the bottom of this correction or about to fall even harder. There's really no middleman between this. If Powell plays it safe, expect a choppy market with no clear trend. If Powell sounds hawkish, aka no rate cuts soon, expect more pain ahead. Big money is hedging, dark pools are making quiet moves, and tech is still bleeding. The only question is, are you ready? Are you ready? Are you ready to lock in? Are you ready to play this market no matter what direction it goes? That's what you have to ask yourself. That's what's going to determine your success. Anyways, this is episode 123 of the Trades and Gains podcast. This is your weekly Outlook report. I'm your host, Max Pitts from 50 Fit, and I'll see y'all on Crit Street. Whoop!